All right, you ready?
Yeah, I'm ready.
Okay, we're back for part 3 of our limited series on gaining sales tax peace of mind when it comes to everyone's sales tax responsibility. I have here with me today Paul Johnson. He also goes by Paulie. He also goes by Pablo.
Oh, snap.
He also goes by some other names that we don't have to mention here. But Paul and I have been working together for 17 years in the sales tax space. And so we've seen a lot, we've done a lot together, and I'm really glad to have you here to talk a little bit more about our next spoke on the wheel.
100%.
Anything you want to share about yourself, Paulie?
No, we've been working together almost as long as I've been married to my own wife. So
Oh, wow.
that's impressive.
Yeah.
In and of itself. But I would say when it comes to taxability, if you didn't watch the first series on Nexus, then Nexus, I mean, it plays a very crucial role in your wheel, if you will.
So let's talk about the next spoke. The next spoke is taxability, right? It's one thing to have Nexus, and we talked quite a bit about that. And if you have Nexus, you might have a responsibility to get registered.
That's correct.
But having Nexus isn't the whole answer, right? So tell us a little bit about your thoughts on taxability and some of the challenges that individuals face, or why taxability is an important aspect or an important spoke on this wheel.
Yeah, 100%. Taxability plays an important role once you've established Nexus, because just because you have a responsibility to collect tax doesn't necessarily mean you have a tax liability because of the products and services that you sell. And the taxability aspect is really from a consulting space that we've been in. Well, the firm's been in for over 30 years. I've been in for 17 years. It's been really crucial because taxability varies by state, by product, by service. Now, by default, services aren't subject to tax unless they're specifically enumerated in the legislation, which they're getting more and more popular. More services are becoming subject to tax. And then you have tangible personal property, which is by default subject to tax. But each state takes a different spin on it. You have your gross receipt states like Hawaii and New Mexico that have their own spin on it. And then you get into the technology space, which is really hot right now in software as a service or digital goods, information services, those types of things. And the taxability varies when you jump from state to state and how they define those across the board.
So there's 45 states that impose a state sales tax law. Is that accurate?
46 if you include Puerto Rico.
Puerto Rico, and then you've got the District of Columbia.
Yeah, and the District of Columbia.
So 47 jurisdictions that impose a sales tax statewide. And then you've got, in a few states, you've got cities, counties that impose their own sales tax law.
That's correct.
Colorado, Louisiana, and Alabama.
And Alaska. Can't forget about Alaska.
So Alaska doesn't have a statewide sales tax, but they do have
those local
a borough, a city sales tax.
Yeah.
So not every state taxes the same thing, you're saying? They tax things differently?
Unfortunately not. Unfortunately not. Well, fortunately for me, I mean, it keeps me employed. But unfortunately for the business, the small, medium-sized businesses specifically, yeah, it's a hurdle.
It's really challenging because a state could have operated for the last 30 years. A company could have operated for the last 30 years in one state, right? And they're familiar with that state's laws. They understand the taxability of their goods and services in that state. But now they've got customers and products and services that are being provided in multiple states, right? And so now they're needing to understand that every state has a different tax law when it comes to sales tax, and different goods and services are going to be taxable. So let's just talk about some of the more challenging areas, right? If you sell a tangible item, this table, it's probably going to be taxable in every state that imposes a sales tax, right?
Tangible personal property by default is going to be subject to tax.
If you provide services, there's various types of services, as you've indicated.
Yeah.
Some states tax services. Some states don't tax services.
Yeah.
Some states don't tax services, but they actually tax some types of services that they enumerate in the law.
Yeah.
And so that can be really challenging. Yeah. But there's to your point, there's some technological advances that the states don't always keep up with.
Yeah.
So software as a service is a big one.
Yeah.
Where you might be required to collect tax in half the states.
Yeah.
Right.
Sure.
Digital goods. There's states that are beginning to tax digital services and digital goods.
Yeah.
At least a handful or more. that have started adopting laws to tax that.
Oh,
right?
for sure. Definitely more than a handful nowadays. I think about, services that have been around for a long time. You think about like janitorial services or landscaping services. And the states have defined these, and more times than not, it seems like they've enumerated them in the legislation. Hey, if you provide janitorial services in our state that meet this definition, it's going to be subject to tax. And then you get into the new technology, this digital age in which we live, or that we've transformed to over the last decade or so, and the states are starting to catch on. Oh wow, there's a lot in this software as a service where it's no longer downloaded or delivered on a CD. It's now just accessed through AWS or through some remote server. And so the revenue that's derived from customers that reside in their state, the states are looking at that as an opportunity to get more revenue. And so they're wanting to, it seems like, pass legislation or enact legislation that would allow the state to collect tax on those sales to customers that reside in their state.
That's correct. This is where I would love to just share with the audience something that you always say when it comes to sales tax law. Listen, the states don't always make sense when it comes to the laws that they pass, but they're not meant to make sense, right? Paul says states like to make dollars, right? And states want to get every dollar that they can.
This is true.
So from a taxability standpoint, I think it's important to recognize, and I think you would agree, that states are consistently changing their tax law. Yeah. So it's one thing if you enter 30 states. Okay, I've got nexus in 30 states.
Yeah.
And what I sell in 30 states, I've determined the taxability of those items. Let's say it's 20 of the states, what I sell is taxable.
Yeah.
The fact is, if you don't keep up with tax law, that could change on the quarter, it could change on the year.
Yeah.
The states are always enacting legislation to collect more state revenues.
Right.
And a lot of times sales tax is the place where they get it, where they get that.
And sometimes, the states are hearing court cases, right? You're going to court to battle and debate whether or not this is subject to tax or not subject to tax. Does it fall under this legislation definition or does it not? And so you have businesses that are going against the court to rule in that. And so based on how the state rules in that one specific court case, then it changes the landscape for everybody. So that's how sometimes you can keep up with the taxability by seeing, okay, what's the court cases that are currently being held and what are those, where are they headed type of thing.
In a couple of scenarios, we've even seen where states, typically if you have a court case and I won't say that it's gray, but it's just the state's interpretation against the taxpayer's interpretation of the law.
Yeah.
And then a court finally decides, okay, we agree with the state, we agree with the taxpayer. And in some cases, they've gotten aggressive enough that in a court case where the state wins, they might even retroactively impose that law. It seems crazy to me that they're capable of doing that, but it just it helps you understand some of the complexity of like really complying with the tax law.
Yeah.
But I think what we're trying to get at here is that taxability is a really important aspect. It's a huge spoke in the wheel, creating some steadiness in the wheel when it comes to what your responsibility might be. So I think what we can say here is state by state, you need to determine whether you have nexus. And there's a few types of nexus that you need to understand. But if you've crossed that threshold, I have nexus, right? That's the first question we always want to ask people. You need to know, do I have nexus?
Yep.
Okay, you have nexus. Now you need to understand, because you don't have a responsibility, right? If you have nexus and what you sell is not taxable, then you really have no liability to the state or no responsibility because you're not collecting tax.
Yeah.
So I have nexus, what I sell is taxable, I believe it's taxable, I understand it might be taxable. Okay, now I need to figure out what to do next. So let's say the process is to get registered with the states. Now, when you begin collecting tax, you have what I call the third spoke of the wheel, and that is you need to know at what rate to collect, right? So I know it's taxable, but taxability is not the same on all products, right? So let me just give you one example, or maybe you could talk about an example of the taxability of an item that might have different tax rates. Not just the fact that tax rates are different across all the states. They have their own sales tax law, they impose tax at a different rate, whatever the state might need by way of dollars. they impose these rates, but you could actually have items that have different rates just based on what they are.
Yeah, I mean, you get into, I mean, if we just keep with the theme of where we are in the technology space, I mean, you get into like software as a service, information services in Texas, I mean, there's a partial exemption, right? It's 80% taxable type of a thing. If you get into dietary supplements or food, depending on how or when that food is consumed or how it's served, it could be subject to the grocery rate, could be subject to the full rate, could be subject to a reduced rate, just depending on the state and exactly what that item is that's being sold. So yeah, understanding the tax rate in particular, not only, I mean, all the tens of thousands of taxing jurisdictions for rates that are out there, but then you get into the products and services that you sell and whether or not they're subject to, what rate are they subject to at all?
Yeah, so what if you over collect tax? Is there any implications, ramifications to over collecting tax? Let's say you're selling supplements. In some states they're taxed at 100%. Some states they're not taxed at all. Some states they're taxed at a reduced rate. Well, what happens if I just take the position that supplements are taxable and I'm just going to collect tax in every state at that state's full sales tax rate?
Well, the state will always be grateful, right? Because they're in the business of making dollars and they're getting those dollars.
It doesn't make sense, does it? I agree.
The customer, though, they may be upset because you're collecting tax on something that's not subject to tax. Now, there's a number of scenarios in court cases, but one that comes to mind is the Peloton case where the users of they were subscribing to Peloton, the fitness app, it's not subject to tax in given states, and Peloton was collecting tax. Well, the users banded together and took them to court.
Yeah, class action lawsuits.
Right?
Yeah.
It was bad news. So again, you're just trying to collect the proper rate, collect the proper tax on what you're selling, but if you over collect the tax, the state rarely under audit is gonna, hey, you shouldn't have collected tax there. They're just, oh, sweet, more dollars in the door. Yeah, we'll take that. You can't also, if you over collect tax, it's not like you can go to the state and get a refund of that tax to keep that tax.
Right.
Because as a registered taxpayer, I mean, you're just an agent of the state. So the tax is not yours to keep. And that's a big thing that customers are always trying to figure out a way to enrich themselves, right? I'm gonna collect the tax and I'm not gonna remit the tax. Well, you don't wanna get into that realm either. So over collecting tax, you have the same thing in under collecting tax. You just set it to the grocery rate, but it should have been the full rate.
Yeah.
You under collect tax. The customer on that end, they're gonna be happy because they're paying less tax. Under audit, you guarantee the state's going to collect that tax from you because you failed to collect it at the time of the transaction.
100%.
So that's a big frustration.
In a competitive market, over collecting by way of ease of application across the board can also cost you some customers, right? If there's a company out there that's not collecting tax appropriately and you're collecting tax, then the product's going to be less expensive with the one who's not collecting the tax. So yeah, you definitely don't want to over collect. What if you under collect? What's the implications for under collecting tax? Under
collection of tax, I mean, that tax is going to get assessed under audit more times than not anyway. If you have a retired or an auditor that's going out the door that's looking to retire, he may not catch it or he may just dismiss it type of a thing. But more times than not under audit, that's where it comes. Again, the customer is going to be happy because they're not paying the full tax amount, but under an audit situation, you failed to collect the proper rate from the customer and that tax is going to come out of your own pocket with penalty and interest.
Yeah, it's a tough world. You don't want to over collect.
Yeah.
It has implications. You definitely don't want to under collect.
Yeah.
But I think the cardinal sin of tax collection is collecting tax and not reporting it to the state. Can you end up, be honest, can you actually end up in an orange suit if you collect tax and keep it?
You actually could end up in an orange jumpsuit for collecting tax and not remitting it. And that's tragic. And we've seen past clients, unfortunately, that they just held on to the tax and, they use it as extra marketing dollars. Maybe they use it as profit distribution. Maybe who knows how they use it, but they didn't get it to the state.
Yeah.
Oof.
Yeah. You definitely want to set up your system, your spokes, so that if you're collecting tax, it's going into an account and that account is cleared out by payment to the state
Yeah.
or to the taxing jurisdiction,
Yeah.
not by payment to your uncle,
Yeah.
right? Okay.
100%.
One last question for you. If you didn't know your responsibility, you didn't know your taxability, maybe you misunderstood the rates or you didn't apply the right rates, so you've grossly undercollected because you didn't register, you didn't know you had nexus, you didn't know your taxability. So if you did that and it's been a little while since you did that, then probably the most common remedy to try to mitigate actual amount of tax out of pocket and penalties and interest would be the voluntary disclosure program. So tell us a little bit about voluntary disclosure agreements and what that means and why that's an incredible remedy and tool for taxpayers out there who find themselves with some exposure because they didn't understand how to comply with the rules.
Yeah, the voluntary disclosure programs are actually pretty good most of the time if you can enter into an agreement with the state. Obviously, well, maybe not obviously, but in order to enter into an agreement, you can't be contacted by the state. More times than not, you can't be registered taxpayer in the state. If the state issues an audit assessment or they send you a questionnaire, then generally that will eliminate you from entering into a voluntary disclosure agreement with the state. The benefit of a voluntary disclosure program, and every state will offer them, and even local jurisdictions will offer voluntary disclosure programs. The benefit is that the jurisdiction, more times than not, will waive the penalty. It's the biggest benefit. The other really large benefit is they limit the statute of limitations. So if you're audited today and you've been doing business for the last 10 years, not knowing you're subject to tax or not knowing that you had a responsibility, under audit, the state's going to go back to when you established Nexus 10 years ago.
Yeah.
They're going to collect that tax, the penalty, and the interest for that entire period.
Oof.
Which is rough.
Yeah.
Tragic. But if you were to go to the state before they audit you and enter into this voluntary disclosure agreement with the state, generally what the state will indicate is, hey, thanks for coming forward voluntarily to us. What we'll do is we'll enter into this agreement with you. We'll limit the look back period to our statute of limitations, which may be 3 years and maybe 4 years, with very few exceptions. And we'll waive the penalty assessed on that tax. The downside is you'll have to come out of pocket that tax amount during that statute of limitations period, whatever that period is, 3 years or 4 years from the time you enter into that agreement. So you pay the tax, they'll waive the penalty. Sometimes there's some room or negotiations on the interest, but more times than not, they're not willing to waive interest. It's not something that they'll do.
Yeah.
So the voluntary disclosure programs, they're really, really great. It's been a while since we've seen an amnesty program, but those used to be really big, where they'll limit the look back period, they'll waive the tax, the penalty, and the interest under certain circumstances. But the voluntary disclosure programs, they're really great. What I like to tell people in going through this process is just help them be educated. You work with a lot of small to medium-sized businesses, for example. You get these guys that started the company, they're wanting to grow the business, and it just boomed overnight or over a couple of year period. And they didn't understand the responsibility well. Now let me educate you on what your responsibility was. Let me educate you on what your tax liability was or is. And then let's talk about some remedies of what that looks like. If you want to roll the dice and play what I call audit roulette or risk roulette, you can do that. But as an educated business owner, usually they're a little bit more risk averse. I'm a little bit more conservative, and so I want to play the conservative game, but educating people on the pros and cons, what their liability potentially could look like under a voluntary disclosure program, understanding what their liability could look like if they're audited today, if they're audited a year from now. And then you get into the whole merger and acquisition. You're trying to sell the business or retire. Grandpa wants to sell to the son. Well,
Thanks, Grandpa.
That golden parachute that he thought he was riding off into, that's full of holes. Now we've got this sales tax liability. So it's huge.
It's often not fraudulent, right?
Right.
It's not intentional.
Yeah, not intentional.
It's usually a lack of awareness, a lack of education or understanding on how the sales tax works, right? And that's why we keep talking about this peace of mind.
Yeah.
You can really have peace of mind if you have these spokes in place and you can really manage this terrain in a steady way. So we've talked about the spoke of nexus, we've talked about the spoke of taxability, the spoke of rates, and how important rates are. Hopefully that's been beneficial, but even a 3-spoke wheel is not very sturdy, right? So we're going to talk about some more spokes as we move on. If you have some questions about Nexus, taxability, and rates, I think it's valuable to get the guide to sales tax peace of mind, so that you just have an understanding, right? We've shared some information here. The guide can help you stay on top of those things.
For sure.
Paul, thanks for your time today to chat about taxability and rates and the impact and importance of that. Appreciate your time.
Love it. Thank you.